In January 2026, Victoria's bushfires racked up $810 million in insured losses in just 7 days. The Insurance Council of Australia officially declared it a catastrophe, the most destructive bushfire outbreak since Black Saturday in 2009. 330 homes were wiped out. 30% of all property insurance claims were total losses. And that was just the beginning, because right now, in May 2026, Melbourne homeowners are facing something that goes way beyond any single fire season. Home insurance premiums across Australia have jumped 51% in just 5 years. In some Melbourne suburbs, particularly those sitting along Port Phillip Bay, the Maribyrnong River, and the Mornington Peninsula coast, people are opening their renewal letters and can barely believe what they're reading. Some of them aren't renewing at all. They just can't afford to. And a growing number of properties are heading towards something that once felt impossible in a city like Melbourne. They're becoming effectively uninsurable. Here's what's actually going on.
Let's start with the hard numbers, because they tell the story better than anything else. According to data analytics firm Finity, the average Australian home insurance premium sat at $1,940 in 2020. By October 2025, that same average had climbed to $2,938. That's a 51% increase in 5 years, and it's not slowing down. In 2025 alone, CanStar data shows premiums rose another 14%, from $2,452 to $2,795 on average. In some high-risk areas, that single-year jump was closer to 17%, which works out to roughly $700 extra on one annual renewal. And those are the averages. Coastal suburbs and flood-exposed areas are seeing far worse. Research from Compare the Market found massive gaps between what different insurers will charge for identical properties in the same postcode. For one home in a Sydney Bayside suburb, the difference between the cheapest and most expensive quote was nearly $2,854. That's not a minor variation. That's insurers essentially deciding whether a suburb is worth covering at all and pricing accordingly. Now, here's where it gets serious for Melbourne specifically. A YouGov survey commissioned by the Climate Council in January 2026 found that 54% of insured Australians are genuinely worried that bushfires, floods, and severe storms could make home insurance unaffordable or simply unavailable in their area. Not a fringe concern, more than half. And the Australia Institute found that in 2025, roughly 1.4 million Australian homes were either uninsured or underinsured. People who technically own a home but have no real financial safety net beneath it. The numbers don't lie. The pressure has been building for years, and 2026 is the year a lot of people are feeling it hit.
Now let's talk about something that happened right inside Melbourne, not on the coast, not in the bush, 5 kilometers from the CBD. Kensington Banks is a housing estate built in the 1990s, developed as a joint venture between the state government, the City of Melbourne, and private developers. It was sold to buyers as a safe, modern community. People paid serious money for it. Then in 2024, Melbourne Water updated its flood modeling for the Maribyrnong River catchment. The models were revised to account for climate change, new urban development patterns, and far more sophisticated data than what was available back in 2003 when the area was first assessed. The result? Around 800 homes in Kensington Banks were designated as being at risk of inundation in a 1-in-100-year flood event. For residents, it felt like the ground shifted beneath them, literally and financially. One Kensington Banks homeowner in a submission to federal parliament reported their insurance premium jumped 30% in May 2024, and they wrote that they expected it to go even higher the following year. David Edershank, a Victorian MP who has lived in the area for nearly 30 years, described the impact bluntly. Residents, he said, were facing increased insurance premiums, decreased property prices, and what he called a precarious, if not ruined, financial future, including negative equity in their own homes. cited experts by the ABC's 7:30 report at the time suggested property prices in the estate could fall by 20%. Some analysts privately said that figure was conservative. The city of Melbourne has since been building pump stations and drainage upgrades in the area. One at Stubbs and Smith Street was completed in 2025, with another due by June 2026. But for people who bought at full market price, believing the land was elevated and safe, the damage to both their premiums and their property values had already been done. What happened in Kensington isn't isolated. According to a 2024 report by Climate Valuation, 588,857 Australian homes are at high risk of becoming uninsurable for flood damage by 2030. In Victoria, that's approximately 2.6% of all properties, and riverine flooding, exactly the kind that affected Kensington, accounts for 80% of the properties at risk.
Pull up a map of Melbourne and look at the coastline. Port Phillip Bay stretches for more than 250 kilometers of shoreline, with suburbs like St Kilda, Williamstown, Altona, Frankston, and the entire Mornington Peninsula sitting directly on that waterfront. A CSIRO-backed coastal hazard assessment for Port Phillip Bay, completed in 2022 and updated through 2023, modeled erosion and inundation scenarios across a range of sea level rise projections. Under a 0.8-meter sea level rise scenario by 2100, significant sections of low-lying foreshore land face regular flooding and accelerating erosion. The city of Port Phillip, which covers South Melbourne, Port Melbourne, St Kilda, and Albert Park, has engineering reports projecting sea levels in the area will rise by around 55 centimeters by 2050 and potentially 1.2 meters by 2100. For insurers, those numbers mean something very specific. Australia's 2025 National Climate Risk Assessment identified sea level rise as an accelerating threat to coastal communities. It projected that by 2050, around 1.5 million Australians could be living in high-risk coastal zones. And according to the Climate Scorecards analysis published in January 2026, insurance premiums in exposed coastal areas are already rising sharply, with the number of homes effectively uninsurable projected to reach 1 million by 2050. On the Mornington Peninsula, one of Melbourne's most desirable coastal areas, a coastal-adjacent home in Mornington now costs on average $2,249 a year to insure. But that's for a standard property in the suburb center. For anything sitting close to the water or in areas with documented erosion history, insurers are pricing far more aggressively or pulling back entirely. A CoreLogic report noted that in some flood-prone and cyclone-exposed areas of Australia, premiums have risen by more than 30% in just 2 years, and the Mornington Peninsula LGA average is already sitting at $2,652 per year, higher than the suburb average, with coastal and bushfire-adjacent properties pushing that number well above the mean. For investors and buyers who've been drawn to the peninsula for the lifestyle and the waterfront value, this is now a real cost item that needs to be factored in, not just a line item, but a question of whether coverage is even accessible.
Then January 2026 happened. More than 30 significant fires burned across Victoria in the space of a week. Between January 7th and 13th, roughly 400,000 hectares burned, an area by some estimates more than 5 times the size of Singapore. Victoria declared a state of emergency. 900 buildings were destroyed, including 330 homes. More than 20,000 livestock were lost. The Insurance Council of Australia escalated the event to a full insurance catastrophe. Insurers received 1,386 claims from the fires, with 30% of property claims classified as total losses. The initial insured loss estimate came in at $786 million. By April 2026, that figure had been revised up to $810 million, and a further update is due in July. A local lawyer in Castlemaine, Zoe Edquist, whose elderly parents' home was declared a total loss after a grass fire destroyed it, put the broader concern plainly.
She said the affordability of insurance going forward was a real worry and warned that current trends may also result in a lot of properties being uninsurable, and that's not just here, but anywhere that's got a realistic risk of flood or fire. Those aren't just personal concerns. They're being echoed by economists and insurance analysts. Global data projects Australia's property insurance market will grow at a compound annual rate of 7.5% through to 2030, driven by continued climate risk and catastrophe losses. That means premiums keep rising. The market doesn't stop adjusting just because households can't keep up.
So here's where things stand as of May 2026. Melbourne's median house price is sitting around $845,000. KPMG is projecting a 6% price rise for the full year. On paper, the property market looks like it's recovering, but underneath that, a parallel story is building, one that insurers, climate risk analysts, banks, and now a growing number of homeowners are all watching. Properties in flood zones are already seeing insurance premiums up 30% in a single renewal cycle. Coastal suburbs along Port Phillip Bay are facing modeled hazard scenarios that will only get more serious over the next 25 years. And the 2026 bushfire season reminded everyone that $810 million in losses can happen in a single week. The Climate Council estimates that 1 in 25 Australian properties will be effectively uninsurable by 2030. In Victoria alone, that's tens of thousands of homes. For buyers, that means doing your flood and coastal hazard homework before signing a contract, not after. For current owners in at-risk suburbs, it means reviewing your coverage now, not when you need to make a claim. And for investors, it means understanding that a property's insurance cost isn't just an annual expense. In some suburbs, it's becoming the single biggest question about whether the investment makes sense at all. Nobody expected it to move this fast, but the data is clear, and everyone watching Melbourne's property market right now is paying attention.